The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the November 29th, wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. If you can't dial in, let your fingers do the walking. You can always send me an email, steve@tfnn.com. Inside that subject heading, please put radio show question, of course, inside the Tiger's Den. Well, just about any ping will do. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Lush Show. Right now, the Dow trend up 67 points, 23,904 is the number. S&P is back 3, 26 and a quarter, or 26.24. NASDAQ 100 down 115 points, 1 8/10% to the downside. Russell's up 4.5 points. Semis are down 4%, over 4%, 58 points. New York Stock Exchange is up 29. So we've got lots to take a look at, lots to cover. You've got gold back $12 right now. Silver down 33 cents. Light sweet crude off 87 cents. Leading the charge to the upside, of course, dollar-wise, it is Bitcoin Investment Trust up $236. AutoZone is up 32. That's a big move for AutoZone. That's nearly 5%. GMAC, or Credit Acceptance Corp, CACC is the number. That's up, or the symbol, up 5%. Allegiant Travel up $10 or about 7%. Amazon down $36, 3%. Google up 28. Priceline down 18. So Autodesk down 17% or $21. So clearly, we've got things to look at. The first question that did come in, and we'll take a look at that first, is going to be for Tom, who is trading the TVIX. And the question says, basically, good afternoon, Steve. I say good afternoon, Tom. I entered a long position on the TVIX earlier this morning and wondering what your thoughts are. The VIX is up almost 8%. Now, as we speak, and we take a look at it, it's up nearly about 6.5%, but not 10% yet. And price trading above the 1050 mark. So let's go take a look at some of those factors that Tom is utilizing or considering for what it is he should do. Now, he mentioned the 1050 mark. And I believe what he's referring to is the 50-day exponential moving average. At the moment at 109 in the afternoon, it's 1049. Now, when the spot volatility index closes above the 50-day exponential moving average, that's why this 1049, 1050 is a level that Tom is looking at. That's when you can then begin to see some carnage done inside the S&P 500, right? The spot volatility, the volatility index is only dealing with the S&P, not dealing with any of the other indexes. So we're going to be paying, so trying to answer Tom's question, we really want to focus in on what can we find out what's going on in the ES Mini, the S&P Cash Index, market breadth, things of that sort to aid Tom with this question. Now, Tom, I would say this typically. Right now, if we take a look at the blue lines on the bottom panel of my screen, that's the Bollinger Band. It's not your traditional Bollinger Band standard deviation out there. The blue line, the top of the line, once we would, if we were to get a close above the 50-day, my target would have been the top of that level, $11. What you have seen today is a high of 10.93, 7 pennies away. So now the target has actually been hit. Now, not that that Bollinger Band cannot be busted through. You and I want to go try to find evidence to suggest that that would happen. But to a certain extent, I would say the message thus far is have a tight stop in on that trade that you're in. And certainly if it closes below 1049, go ahead and take your profits. But you may want to consider taking your profits now. That's what this chart says. So we'll just kind of go through this methodically to try to figure out what now. On the bullish side of your TVIX trade is the mere fact that we've had a very short divergence. We're referring to the trading days between November 24th and today, where we saw rising bottoms on a closing basis inside of the spot volatility index, while the S&P 500 was moving higher. You'll see other notations on my screen that show other examples of that. And each of those have led to some type of retracement. Certainly no market top, some type of retracement out here. Is this it? Is this the one-day wonder, 3 points or something? I don't know. So you'd have that potentially, no, you'd have that going for you. Oh, by the way, and what Tom also pointed out was, he mentioned a one-day rate of change is less than 10%, because Tom knows if he sees it over 10%, and there's no reason and there's always that possibility. Coming today's close, we could see a huge market sell-off inside the NQ, maybe just the overall markets, and in which case the spot volatility index could close above a one-day rate of change about 10%. And Tom knows he would absolutely, positively close that trade out and come back and relook at it in the morning. Now, here's what's going against you as we speak, Tom. If I look at the 60-minute market breadth for the S&P 500. Here, what you would be looking for in order to really consider on a short-term basis getting short the S&P, you'd want to see a bearish cross, the red line closing above the green line. This is measuring the market breadth of the S&P 500, or how many of your stocks are in there, and determining the number of stocks trading above their 60-minute profile versus a number of stocks trading below the bottom of the profile out here. So support and resistance. You have 273 stocks above resistance, 144 below resistance. This is telling us that, and this is a short-term basis. Look, I have a 30-minute chart out here for the same set of vehicles, but this thing, you know, this is very much a whipsaw out here. So best to use the 60-minute time frame from a short-term standpoint. Tom, I would say that if you were to see a bearish cross coming into the close, that could say, okay, go ahead and hold on to it. But at this stage here, this is not showing any kind of erosion inside of the S&P 500. We don't care what the NQ is doing or what the NDX 100 is doing when it comes to trading the TVIX. Not that there can't be a contagion, so to speak, but at this stage here, I like your trade, and I like the idea of taking those profits. So when we get back from this first breakout here, we're going to go take a look at the markets. Not that we haven't, but we're going to go try to answer our second question that came in, or request, I should say. Looks like there's a few. One, if we could take a look at the NQ, the Qs, the NASDAQ, etc., and we'll take a look at that. The other question is about the NDX, the Euro, oil, gold. Woo, that's a load. But we're going to cover it all for you when we get back from this break. Steve Rhodes with TFNN. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back. So we're going to go answer or try to answer the questions for Sammy in the den, Mr. Z in the den. In essence, their question were if we could take a look at the NQ. Did November 24th mark a top in the NASDAQ 100, the euro, oil, gold, things of that sort, not specifically to the date. So we'll take a look at those. We'll begin by taking a look at the NQ, which most certainly has been trashed out here thus far today. Big move to the downside. If we take a look at the daily chart, we use Stevie's signal charts, it definitely has confirmed a price relative strength divergent top out here. Nice old bearish engulfing candle to do just that. Now, if there's going to be a continued move lower, we would anticipate that the NQ would pull back or could pull back all the way to 60.79 area. That's utilizing this chart. Now, there are areas of other levels of support that must be broken in order for that to occur. But that would be a potential outcome area if, in fact, this is some kind of top of some type of duration, certainly more than one day. You have the indication of that from this chart that we are looking at right now. That is the NQ. That is on the daily time frame. Now, we switch from here from a daily time frame to take a look at the TAS market profiles on a daily time frame. So we'll go ahead and I'll enlarge that chart. And what you're going to see is that price right now is traded at 63.28 and a quarter. The top of the daily box, which is really the first level of support, yes, price is trading below that, but this is going to be an end of day indication or indicator to us. 63.35.60. That's the level that you are watching. If price closes above that, all that took place thus far today is a test of support. Now, we say the resistance level is the first area that we're looking at because old resistance should become new support. But the reality is here, I would say in looking at this chart, the real level of support was 62.87.90. Why, when we look at the daily chart, would we say that? Well, the last time that we had a close above the top of the box was on November 16th. The very next day, price pulled back. The very following day being November 20th, price came down, tested that center line of the box and bounced from there. Today, we've seen the same pattern thus far. Prices come down, found support at that center of the box, and it has bounced since then. In order for the NQ to confirm that this ECM, potential ECM top is in place, I would say you need to see a close below the bottom of that daily profile, that's 62.24. Maybe we get there at the end of the day. Maybe we don't. I don't know. I would say that 62.87 area is a place to look at for support. It has worked twice. Will the third time be a charm? I don't know. What else was going on inside the NQ as price was moving down there? Well, on a 30-minute time frame basis, we can go take a look at the Tom DeMark setup 9 counts out here. And we can see that the actual bar on a 30-minute basis that made the low thus far was a 9 count. Why do we pay attention to 9 counts out here? We pay attention to really 3 numbers, but specifically I'm going to show you the 30-minute chart and the 9 counts out here. And oftentimes they can identify at least a bounce or counter trend rally or counter trend decline pullback out here, and oftentimes they can just mark that's it. That was the exhaustion. That is like, look, for those of you that live in Florida, you know what I'm talking about. When a storm just kicks up out of nowhere or out of somewhere, but it comes in, it can be just hellacious, if that's a word out there, and then boom, it's gone, and the sun comes out. Well, this is the same type of thing. Many of you that live in the Midwest, the North, the East, or what have you, you guys have storms that blow in and they stay there. Not here in Florida, typically, just in the hurricane-type storms. Our storms come in, they usually come in a huge way, and then boom, they're gone. Well, the 9 count inside of Tom DeMark's system, inside the NQ on a short-term basis, helps us to identify where that storm is going to try to clear. And you can go back, you can do this. All you have to do is start counting 9 consecutive moves higher or lower, where those moves are greater than the close of the bar 4 sessions ago. Yeah, you heard me right. You can go get the book and see that. And you'll see oftentimes where that marks at least a short-term change in trend. It can also identify the exact change in trend. Well, on a 30-minute basis out here, guys, I would say you're going to watch 63.42 and change, 63.43. That's Stevie's red line out here. If you get above that, that says price wants to continue moving higher. Now, on a 30-minute basis, where is that higher? That higher would be 63.52, so it's not much higher. That happens to be the top of a 30-minute profile. If there's going to be a spot where this counter trend rally is going to end, it'll be between Stevie's red line, the 49 level, and this 52 area. Remember, the daily chart, you're going to be watching the top of that box as well. And that price, I'll give it to you one more time, 63.35. If you close above that, in essence, support has held inside of the NQ. With regard to the NASDAQ 100, the Q's out there, you can see that you are just slightly, and I mean this could be just kiss and tell because we need a little bit more time on this. This is on the half hour. When this is an hourly chart out here, you're seeing a little bit of a bearish cross on the 1 hour chart. How about the 4 hour chart? Nothing doing. How about on the daily chart? Of course, nothing doing out here. So we really have only seen a few chinks in the armor. Not the kind that are going to go ahead and confirm a ECM top out here inside of the NASDAQ. So that's my take with regard to what the charts are communicating to you and I. And this is very cool because we know the levels to be watching. Look, likewise, if that 30-minute, if today's lows get taken out, that's also a big message. That message, 62.24, would be the number to pay attention to. Now, let's go try to take a look at, not try, let's actually do it. We don't try to do anything here. We actually do it. And that do it is the question of, is there some type of top inside the euro? Well, if I take a look at the euro, my preference because of live data feed is going to be to look at the euro futures contract. Unfortunately, I've got the continuous, not the December contract, but that's going to work as well. And at this stage here, what we have that's going on in the euro is nothing more than a retracement back to Stevie's red line. That's that oscillator unchanged line. When the price oscillator, very bottom panel of the screen, gets to the 0 level, you can see right now it's at positive 0.00118. So it is above the 0 line. What you anticipate, what you expect is Stevie's red line and price to catch up to each other. if what occurs out here is nothing more than a test and rejection, meaning the two twain shall meet, and then price just simply bounces off that, stays above the red line, the answer is no top in the euro. In fact, the euro then just gave you the most bullish message that you could be looking at, and then you've got A to B equals CD patterns to the upside. So has the euro topped out here? Well, if price were to close below Stevie's red line, 1.1811, then maybe you have something. In the futures contract, you'd really be looking to that last level of support. That's the bottom of the daily profile, and that's at 1.1753. So at this stage here, there's a test, an important test that's going on that could assist in answering the question, has the euro made some kind of a top? Until then, it'd just be a guess. I'm not interested in guessing for you. Let's see what happens on that test of price and Stevie's red line. And then it will reveal itself to both you and I. We'll go do the same thing for light sweet crude, for Goldilocks. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Now, we went through kind of in detail the NQ specifically. Sammy had asked about it inside the Tiger's Den, as did John as well, and I was going to cover that anyways. And the reason is because subscribers and I, personally, subscribers and I were long the NASDAQ 100. We were, up until about, I don't know, 10 o'clock or so. I don't have the exact time. But we were 90% long the market via the NASDAQ, via the Dow, via the S&P 500, via the Russell 2000, and via the consumer discretionary area. We adjusted our stops accordingly this morning. The market went ahead and took us out, and then that says, okay, now we have fresh sets of eyes to come in and determine, is this a buy point for us? So at this stage here, for all of my subscribers, we're not going to take any action because we are very well long in the market, even though we're looking to put that other 10% to use. Now we've got a little bit more to put to use, and we'll try to figure out where that next best level is. It could, in fact, be the NQ. This could have just been nothing more than a little bit of a storm, but we'll just go ahead and sit because we're well positioned inside the Dow, inside the S&P, inside the Russell with regard to profits and our stops that we have there, and inside the XLP. So there's really no action for us to take. The market took the action for us, and if I see something, then we will I'll come back at you and suggest to you what to do out there. With regard to gold or oil out here, now in oil I only have the continuous contract right now, so my apology there. It's at 56.98, different than where the current contract, February contract, is trading at 57.04, but that's okay. With regard to has light sweet crude found a top again, I'd like to really have the actual contract out here. Based on the continuous, it's a possibility. And the reason I say it's a possibility, and we'll go look at profiles, is because what we have seen the last 2 days is price test Stevie's red line, and we're back to a falling price oscillator. That says to me that there's a retracement going on versus a falling price oscillator below zero. But that retracement inside of light sweet crude could take you into the 51, 52 type area. That's what that chart shows, the continuous. Instead, let's go look at the actual profiles for light sweet crude. This is going to provide us with better information. Oh, wait a minute. We're going to go to Stevie's synthetic contract because of the rollout here. And I'd like to give you what I consider to be better information out here, albeit it could easily be different information. So when we take a look at light sweet crude, I'm just going to focus on the daily chart out here. And what you're going to notice, so we saw on Stevie's other charts where you've got price below my little red line there, says retracement is underway. We have a brand new market profile that formed today on the daily basis using my synthetic tool out here where I stitch all of the contracts together, and it provides us, especially on the longer term, with a better, more reliable set of profiles. Now we can see here that the center line of the box, 57.88, much closer to the top, 58.27. That tells us that the snipers were really hanging out in that area. Well, those snipers we can actually see have been able to do some good. So this is a bearish structured box. This says that where light sweet crude is going to head to, or should head to, is 55.54. If price closes below that, then that 51.50, 52 area would become its next price target. At this stage, is this a top of significance? I don't know. We do know that it's enough of a short-term top that price should be able to explore the 55.54 level. That's all that I can provide you with on light sweet crude at the moment. With regard to gold, what is it doing today? Well, what the Sam heck? This chart has not updated. I know gold's not trading at 12.94, so that's a slight problem. However, I can't overcome that. That's a real bummer that it did that. That is a real bummer that it did that. Why, oh why did it do that? Give me a second here to see if I can pop open a new chart for gold so that I can more visually answer your question, because most of us learn visually, and even though you guys many of you are listening out here by your device. Okay, there we go. So now we got, well, that's the 120-minute chart. What the Sam heck was that? There we go. Okay, now I got a chart that you and I can look at. So we're looking at the price of gold. We're looking at the bottom panel, the price oscillator, really right at the zero line. It was one of the, the euro. We were looking at the euro out here, where we were looking at, in essence, the same pieces of information. But we're focused right now on the February contract for gold. And what gold has done thus far is exactly what it should do, what it should be doing. I am not at all surprised that we've seen the red line and the price, in the case here of gold, come back and touch each other, test each other. And this is where the rubber meets the road out here. It's very possible that right here, right now, this is where gold is forming a bottom. It's also possible that that's not the case. You can just simply wait one more ping, one more day, Vasily, out here, because if you see gold close basically right around here, and you see gold start trading higher tomorrow, that is going to give us a bullish signal out here. You still have rising prices. So has the ECM date identified a market top in gold? Not yet. Not a chance. Gold is actually doing exactly what it should be doing to either confirm for us that, in fact, sellers want to just simply stomp on this nice metal out here, this nice precious metal, with price heading lower. And the way that it would do that is price will close well below Stevie's red line. We would then have a falling price oscillator below zero. Any bounces would find resistance at the red line, versus, as we can see out here right now, for the last several weeks, we have found support, in essence, at that red line area. So gold is doing exactly what you wanted it to do, whether you're a bull or a bear, because this is the test that you have been waiting for. Or certainly, it's the test that I have been waiting for. So that's what's going on in gold. That's what's going on in the euro. That's what's going on in light sweet crude. That's what's going on inside the NASDAQ and the Qs out there. Let's go see what, and that's what was going on inside the TVIX. Let's go see if there's any other questions that have popped up here. Looks like we've got one from John. Let me go back to it. John says, hi, Steve. I say, hi, John. Any possibility one of these two is going to the moon? One of these two. John, there's nothing in your email. There's nothing in your email. So I don't know if one of these two is going to the moon. So do me a favor, write me back, and because I don't see it inside the actual email out there, the two instruments that you wanted me to take a look at, but I will be happy to do that. Okay, so I don't see any other questions in the bin, so to speak. Let me take one quick peek here inside the Tiger's Den, see if there was anything that I've overlooked, and nothing that I see. So if you got a question, please go ahead and post it, and I'll absolutely get to it. So where do we go to next? Let's go to just some other general things that you and I should be taking a look at inside the markets out here. Because, look, there's no question that we have to pay attention to what's going on inside the NASDAQ, specifically NASDAQ Composite, because, you know, that certainly can be the germ in the room. And if you haven't had your flu shot, I mean, you don't have stops in place, that could be a slight problem. So let's go take a look at the NASDAQ Composite when we get back from this break, and let's go see if its advanced decline oscillator reading is above or below zero. Above zero means who is in control, buyers or sellers? We're going to go find out who's in control at 1:38 in the afternoon, inside the NASDAQ Composite, inside the Dow, inside the New York Stock Exchange. When we get back from this break.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share bull and bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. It's that time of year again. The TFNN Salvation Army Tiger Dollar Holiday Sale is back. Through this Sunday only, you can get a 25% bonus on any Tiger Dollar purchase, and up to 10% of whatever you spend will be donated to the Salvation Army in your name. This sale only comes around once a year and is one of the most rewarding promotions we have. Tiger Dollars are a great way to add extra savings to any TFNN product or service. Whether you're considering signing up for any newsletter or workshop in the future, or you're already a subscriber, Tiger Dollars offer an immediate savings on any TFNN newsletter, webinar, workshop, or Master Trader series. And they never expire and are fully transferable to friends and family. For all the details and to take part in this special promotion, visit the front page of TFNN.com before this sale ends Sunday, December 3rd. And happy holidays from TFNN.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So one of the great tools developed by Sherman and Miriam McClellan is the advanced decline oscillator levels that we use. That's the very bottom panel of the first three charts from left to right that we look at. And inside the New York Stock Exchange, you've made a new all-time high. Yeah, you've got a little shooting star candle as we speak at 1:42 in the afternoon, but that oscillator reading is above zero. Tells us that buyers are still in control of the market. The same holds true from the NASDAQ Composite. Never once during the push lower, which all it did was it closed its gap. Gaps are our friends. And so price came down and tested the gap. Thus far has rejected it. The NASDAQ Composite advanced decline oscillator reading is above zero. Reading right now at 60.23 or somewhere right around there. Tells you buyers are in control. Really, it's a similar message to what we looked at when we looked at the NASDAQ 100 market breadth, daily chart out here. This is a daily chart that you and I are looking at. We discussed the spot volatility index. Resistance should have been $11. We saw a high of 1093 today. So actually, all still looks pretty darn good. Inside the New York Stock Exchange, what looks even better is the mere fact. I've got to go find it. It's probably way towards the back out here. Is this it? Yeah. What we have here inside the New York Stock Exchange yesterday, new all-time highs both for the advanced decline line as well as the volume advanced decline line. That, my friends, is absolutely, positively, unequivocally not how markets may make significant tops. And so in going back and saying, hey, is this a ECM top scenario out here? Not the way that the New York Stock Exchange is trading, not the way that the advanced decline line has traded in the information. Typically what we would see, not typically, typically what we would see, I got to say typically, there is an instance where we found that that was not the case. Typically what we would see is you would see some type of divergence. You would see price making higher highs. You would see the volume summation indice not doing that, making lower highs, and you would see the advanced decline line making lower highs. We don't have that in place today. So the New York Stock Exchange is suggesting to you and I that price is still going to, that we're not going to see any kind of major top for several months out here. That's its message. Can it be different this time? Yeah, I suppose so. But it's got some pretty good precedent to suggest otherwise. What else should we go look at? daily equity futures contracts. We took a look at the NQ. If we take a look at the ES, the Dow, the YM, the Russell 2000, everything is above tops of boxes out here. So these are very bullish messages for those equity futures contracts. If we take a look at the weekly basis, price is above all of the tops of the boxes there as well. So this is nothing more than just kind of a brief sell-off. It could even continue to sell off a bit more, but no significant levels of support have been broken thus far. And inside the NASDAQ composite, don't forget, gaps are your friends. Those are considered breakout areas. And all that has taken place thus far inside the NASDAQ composite, now let me do it I'll do it like this, yeah. I'll just try to do a clean chart out here. Makes it a little bit easier for you to take a look at. C1PQ. Let's get this thing on a daily basis. Let's get rid of the other stuff that's going to pop up on my screen out here. So this way we're going to look at something that's very raw, cowhide raw, and what you're going to see, and we'll just simply go identify the gap. And for me, you can identify this gap in two different spots out there. Both of these you can see were hit and established. So the gap that we're taking a look at from November 21st, all price did was come down, fill that gap. Now the benefit there, if you were a bear, you didn't want to see that. You wanted to see price stop short of that gap, and then tomorrow see a gap down to create a nice little island top reversal. You didn't get that. All that you've actually seen is price come down to a level of support, the gap out there. And that's why subscribers would be saying, "Hey, Steve, should we go back along the NDX 100?" I want to pay attention to end of day data and some other stuff. We'll put that additional money to work. We just don't need to do it necessarily as we speak right now. We're pretty well loaded up to the high side out there. Somebody might say, "Why did you go long the XLP?" And there are basically three reasons that we went long the XLP out here. I will show you what those reasons are. The very first one, the most important one, was the weekly time frame chart, where we took a look at a weekly Gartley buy pattern. For those of you not familiar with a Gartley buy, I'll get you familiar with it as soon as my chart updates here. Come on, update. If you don't update, it's a problem. Come on, update. Okay. XLP. Now, what a Gartley pattern is, it's an opportunity, perhaps one of the best opportunities, to get long some vehicle, in this case here the XLP, that had a nice trend that you missed. And what you do is you look for an A to B equals CD to the downside. I'll draw that in. Your A point was out here, that little TD 8 count, 9 count area. Although your B point is the hammer candle, your C point was the move up into August 18th. You're going to see an exact 1-to-1 A to B equals CD. Now, just to hit your targeted price level is not enough. It's not enough for me. It should not be enough for you as well. What you need to see is the cavalry rush in. And the cavalry rushed in, and they created this nice morning star candle out here. Look at that big, wide-ranging bar. And price got right up to Stevie's red line on a weekly basis. Now, look at what the price oscillator was doing. The price oscillator was down at 0. You anticipate a test of price coming up there. You wait for the next bar, maybe the next 2 bars. In this case here, it was the very next bar. As soon as price got over that red line, we went ahead and executed the trade and went long. That was the weekly. This is a longer-term Gartley buy pattern. All Gartley patterns have 5 different outcomes. The first 3 are retracements. 382, 618, 786 from high to low. The next one is 100% move. The next one after that is an A to B equals CD to the upside. Now, the daily chart did the exact same thing, had the exact same pattern. So you had 2, in essence, beautiful Gartley buy patterns come together at the same point in time. We looked at the intermediate term chart where price was right around its price oscillator. We now have a rising price oscillator on the daily chart above 0. If you take a look at the number of issues, albeit not that many, inside of the XLP, what we can also see is on the trading session of November 9th, that gave you a nice bullish buy signal. 23 of the issues inside the XLP are trading above the top of the box. You want to know how many are trading below the bottom of the box out here? 3. Don't trash the XLP. There's nothing to be trashed inside of it. And that is, or those are, the reasons that we went long that specific sector. All righty, let's see what else is it that we can look at. Well, we're going to go to break here in about 6 seconds. I'll see if John was able to, was listening in and sent in another message, and we can go take a look at things that he thinks are going to the moon. If not, we'll find some way to wrap up the last 2 minutes. This is Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com. Educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back. Dow's up 72, S&P down 4. So John was able to write back in, and he gave two symbols here. We're going to look at the XLF because I see the golf guy has also sent in a request. So let's go take a look at the XLF. And he was talking about a moonshot. Now, what the XLF has done today, it's taken out a swing point. It's done it with volume. The swing point that we're looking at, it was either October 25th with 68 million. You're already at 96. Maybe it was November 2nd with 51 million. So you already have an A to B equals CD pattern on the daily chart out here. So I'll show you what that small A to B equals CD looks like. You'll see that the 1-to-1 gives you a price projection, John, of 29 bucks, even Steven. The retracement was less than a 0.382 retracement, and therefore there's no way this is just a 1-to-1. When I say no way, I mean no way. And so price at least is going to target 29.85, 30.94. Now, John, Where price is really headed to over the long haul with regard to the XLF is the larger A to B equals C to the upside. We can see back here the trading session of July of 2015. Monthly chart had volume of 787 million shares. That swing point was passed with 2.2 billion shares. That is past the swing point with wide price spread, accelerated volume. And you'll see that the 1-to-1 on this is 3106. That's where the XLF is headed to. That is not the moon. That is just really getting back to the 2007 highs out here, where the XLF is really headed to, because that too was less than a 0.382 retracement, is going to be 3542, 4097, 4709, anything along those lines. So that is where the XLF is headed to. With regard to the golf guy, you wanted me to look at GPL. If we go take a look at Great Panther, GPL, let's not, well, the monthly chart, that doesn't look too good. Let's put this on a daily chart out here. And what is this thing doing? Golf guy. Let me put up some market profiles for you. See if I can do that in the next about 2 seconds out here. This ought to have support at 114. If it holds 114, maybe you get a bounce up to 120, maybe even 129. Don't let it close below 114 even, Steven. Folks, stay tuned. Your favorite polar bear, David White's up next. After David, you've got Tom O'Brien, 3 to 5. I'll be back with you on Terrific Thursday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.